Good morning, guys. So, let me introduce myself. I am Pablo Chauhan, BCom CA from Sangareddy, TTWRDC. So, now I am going to take theory of accounting. So, this is the fundamentals of accounting. This is a mandatory to follow those when you are going to prepare the accounts. You should and must follow some rules and regulation about preparation of accounting. So, that time So, when we are going to solve the problem, we should know the background of that problem, theory. So, theory is fundamentals of accounting. So, when you are preparing accounts, you should and must know the theory. So, why we are taking in debit side and how we are taking the debit side and why we are taking in credit side. So, that is the important thing, and as well as and why we are taking in credit side. So here in this lecture we are going to learn this objective of learning. So meaning and nature of accounting principle. So what is the meaning and which nature is that, and how why we are following this accounting principle while you are preparing accounting. And next, future of accounting principle and necessity of accounting principle and accounting principle. So future of accounting, what is use of those accounting principle, and we are following, okay, but if we follow that accounting principle, what is use for that? So if we get any benefit or if we get any disadvantages, if we get any easy access to understand the information of accounting, so that is the entire concept we will discuss in this session. So necessity of accounting, so why we are preparing or why the accounting principle is important to preparing the accounting. So that is the important thing. And types of accounting principle, there is 10 types of accounting principles are there. So that accounting principle we should know, then will be when we are going to discuss, when we are going to explain those problems to the our higher authority or our high high level authority. That time we should and must know those why we are preparing this account and how we are preparing this account, and why they had taken so and so transaction in debit side and why they had taken so and so transaction in credit side. So we should know, then will we realize, and then will we understand everything in accounting. So here, guys, first thing we have to know the which we are, why we are following this and how we are executing those result in output. So here, guys, accounting principle. So accounting principle, accounting concept and accounting convention, commonly known as generally accepted accounting principle, that is the shortcut form is GAAP. It will explain you or the basic rule, that is that define the parameters and construction within the accounting operators. So accounting operators, there is the entity, the different entities are there. So like this, you want to X company, Y company, or Z companies, three companies are there. So they are following their, as per their understanding, as per their opinion, they are following their own rules and they are preparing so and so transaction. So when they are going to gather one place or end of the majority of those the so and so discussion point of view term, so that time they should analyze the differently. Why? Because you x1 follows the different rules and regulation and y1 follows the different rules and regulation, and the z1 also follows different rules and regulation. That time we cannot understand effectively and we cannot understand very easily, and we cannot access those results quickly. So that is why we must and should follow one principle: one man, one person, one vote. Like that, we should follow one accounting principle, concept and convention, or commonly that accounting principle or concept should be accepted by general. Okay, generally accepted. So everyone should accept, every industry will be accepted, the small industry, high industry, the joint stock companies, like that the MNC companies in the entire world. There is a MNC companies are there. So different country, they are have the different culture. So as per their opinion, they prepare their accounts. So while we are gather one place, so worldwide trade, so World Trade Organization. And we will meet the MNC companies, multiple or MNC companies, different MNC companies meet one platform. That time they will shows their accounts in front of the businessman. That time, so they don't know, if they don't know, if they don't know the rules and regulation, and if they don't follow one rule and regulation, how can they understand effectively? So that the accounting principles should be followed by everyone, as per everyone should follow, everyone can follow those. That is why it says generally accepted accounting principle. So here guys, next thing is accounting standards. Accounting standards. So accounting standards, there is an article. So I want to give one example. So in constitution, so they given some articles for citizens to follow so and so. You will get so and so right to inheritance or result. So inheritance or result, then you will be understand very well. So that is why he is saying that everyone should follow one rules and regulation. So here the accounting standards are practicing, adapting and preparation of accounting statements. When we are going to prepare accounting statements, we should follow some rules and regulation articles. So here articles is, one article should follow like this, one article should follow like this, 1 2 3 4 5. So we have to follow like this, 1 2 3 5 4. And if we zigzag those format, they will confuse it, easily confused, as well as they cannot understand our feelings, or our feelings, or what do you say, or known as our accounts. So here the accounting standards should be standardable, so everyone should accept and so everyone should follow those entities. So next, meaning of accounting principle. The meaning, the principle of accounting, or the generally law or rule adapted or proposed as guides to action, a settled ground or basic of conduct or practice. So here guys, you can see whichever accounting is this, we should follow like this. Generally they will accept, everyone should accept those parameters whichever mean. So here guys, the rules and norms and rules and regulations should follow everyone. Accounting principles are the rules adopted by the accountants universal while recording accounting transaction. They are the norms or rules which are the followed in of various items of assets, liabilities, expenses, incomes and gains, extra. So when we are writing assets in asset side, when we are writing liability side, so like that the other entity also should write like that, then they will access those result easily. Okay, that is the meaning of accounting. And next thing is the future of accounting, the features of accounting principle. The accounting principle, first one is accounting principle are man-made. So those principle, accounting principle made by man. So as per his situation, as per his opinion, as per his convenient, as per his opinion, as per his wish, he can modify those principles, he can follow those principles. Once you listen, accounting principles are man-made, and therefore they are the best possible suggestion based on practical experience. They are recommended for use by all enterprises to ensure the uniformity and understandability. So understandability one, everyone can understand. So like sole proprietor have small books, and what is important if have the big books, or here the one person is there. So as per he is, he can prepare his account, so he can follow single entry or double entry or whichever it may. So he will maintain, he will prepare final account or not as per his wish. But in partnership he should follow some rules and regulations, as well as he should prepare everyone partners account, as well as he should shows those realization account, so revaluation account, so capital account, the home, which partner is going to invest how much money, though he should show. And next and the balance sheet, The balance it means the how much property they have in hand and how much liabilities they have in their outside. This is should shows on the partnership. So like that, accounting principle are man-made. So as per his convenient, he can modify and he can convert those principle into as per his wish, but he won't cross those some rules and regulation. So here guys, accounting principle are flexible. So accounting principle are flexible. Accounting principle are not rigid but flexible. Accounting principle are not permanent but change with the time. So as for his convenient, as for his opinion, as for his complement, as for his nature, as for the time, he can modify those principles. So why? Because there is a flexible to modify these rules and regulations. And next one, accounting principle are generally accepted. Accounting principles should be accepted by generally, so everyone should accept it. Here guys, accounting principle are the base of a guideline for accounting or and are generally accepted. The general acceptance of the accounting principle you usually depends on how it meets three criteria. So relevancy, objective, feasible. So they are as for their time. So here guys, one business we had started in middle of the maturity period or financial year period. So one person is death. So death of the partner. So that time they must carry those loss or profit or whichever it may be, carry it on them, the remaining two partners, and they go ahead. Why? Because that is the situation is demanded. So situation is demanding, that's why they are going ahead. So that is the rules and regulations they should follow. So why? Because that time they modify some rules and regulation in the form. Why? Because there is no convenient time to follow some rules and regulation. So that is why the organization, the business, the must accepted by general accepted, everyone should accept generally. And next thing is the necessity of accounting principle. The necessity means the what is use, why we are following. If you are following, okay, why we are following, okay, why we are following, we know. So how we are implementing those principle in your real life. And real life means in way of preparing accounts. And as well as you can see here, accounting information is a better understanding if it is prepared follows the set of accounting principle uniformly. So if one entity, so there is a different entities are there. Entity means different parts, different branches is there. I want to give one example. So what do you say? Okay, X company is there, X and Co. X and Co, he have multiple branches in country. So like MNC company. So he X company have one company in Hyderabad, as well as he have the another X company in Mumbai, and another company in Chennai, another company in Madhya Pradesh, another company in Delhi. So there is a different places of companies he have. So that time he says everyone should follow one rule regulation uniformly. So then will we understand the how much how we are recording, why we are recording those transaction in debit side, why we are recording in transaction in credit side, and which account we are following. So real account or nominal account or personal account. In the situation demands, as per situation demands, we should follow real account and nominal account as well as real account. So when we are preparing rent, when we are going to pay rent, the house rent or property rent, whichever rent, that time we write rent account data to cash account. So rent means rent is the expenses is increasing, so that is why we are debiting it. And income is going out. Income is going out. So income is going out means that is one type of we are losing. So that is going from business, not coming into the business. So going out of business. So that is why cash is credited. Okay guys, that is why it is saying that everyone should follow the one rule, one command, one direction. Then will we understand very easily and very simple. Okay, here it means the same accounting principle are followed by all entities in preparing their final accounts. Accounting information is a meaningful and useful for user of accounting information of the accounting records, and the financial statements are prepared following general accepted accounting principle GAAP. So generally accepted accounting principle, that is a must answer. So what we are saying that you should follow the rules, some basic rules and regulation, has the which the board had announced to us. So then will other branch will be flexible to understand these things. So next thing is account. Accounts. So accounting principle and others. Accounting principle we have to say the first one business entity and accounting entity, and second one money measurement principle, and third one the accounting period principle, and fourth one the full disclosure principle, and fifth one materiality principle, and sixth one produce and conservatism principle, and next one the cost concept or historical cost principle, and next one matching concept or matching principle, and next one the dual aspect or duality principle, and 10th one the revenue recognition concept. So guys, here you can see that is the 10 principles of accounting principles are there. So the first and most important is the accounting entity, the business entity. Here guys, according to business entity principle, business is considered to be a separate from the its owner. So here you can see the picture that there is a owner is different from organization. So when you invest the money into the organization, we treat it as a capital. Capital means indirectly it is one type of liability to our organization. Why we are writing in liability side? Because we have to pay, we have to repay to the owner. So why? Because according to business entity concept, its owner is different from its owner is different from its organization. Owner is different from its organization. So when he is borrow some money, or when he will borrow the goods, and when he pays his personal expenses from organization profit, that time we write as a drawings. So here you can see the business transactions are recorded in the books of accounting from the business point of view and not from the owner point of view. So when he will going to take anything from organization, we think about organization. So organization is going to give the so and so goods to owner. So owner, why he is taking, how he is taking, and where we are deducting, and those whichever had taken by owner, we should take it in capital account. Why? Because there is a capital account whichever it will be taken. There is a money measurement concept. The goods or fees or what is the cloth or whichever it may be taken from the organization. That transaction should be measured by money. So that money we are deducting from capital. Why? Because why we are deducting those money from capital? Because that capital is invested by owner. Capital is invested by owner. And next thing is money measurement concept. Money measurement concept. Yeah. According to the money measurement principle, transactions and events that can be measured in money terms are recorded in the books of accounts of the enterprises. Stating that differently, money is the common denominator in recording and reporting the transaction. The principle suffers. So here guys, whichever activities is done in organization, we should measure in money measurement. So when you are going to pay rent, when you are going to pay wages, when you are going to pay salary, when you are going to pay commission, when you are going to give discount, that time whichever it may be, you are measuring in terms of money. Why? Because without profit, if any organization, if any industry, if any group of people, if anyone working for non for profit, it won't called as a business. That is why whatever it may be, organization, group of people, or whoever it may be should earn money, then it will called business. Otherwise, it won't called. So everything is measured by money measurement. They will measure in terms of money. That is that. And next, accounting period principle. According to According to the accounting period principle, the life of an enterprise is broken into smaller period so that its performance is measured at regular intervals. So here, guys, there is the financial accounting. So someone follows a general year, and someone follows a financial financial year, and someone follows the as per their wish. So here India we follow the financial year like March 30, March 30, April 1st to March 31st. So April 1st this year, first April 1st to next year March 31st, that is called financial year. So that's they are following one particular timing. They are following some rules and regulation. Why? Because when they are going to prepare final account, completion of their period of the maturity date or the period complete of their financial year, then will be marriage. They will calculate their financial account. That is told in accounting period principle. And next one, full disclosure. Full disclosure means there should be complete and understandable reporting on the financial statement of all significant information relating to the economic efforts of the entry. So if you are going to write one transaction in one so and so information in your book, you should have one evidence, one you should have one complete information about those transactions. So we are one I'm going to give one example. I brought so and so good from Buddha. I had brought so and so goods from Buddha and with so and so price. So that transaction I write disclosure. So disclosure means complete information I had it, because which good I purchased, as well as with how much money I had purchased, as well as how I purchased, when I purchased, and where I purchased. So that is why that's all the information is available in the one vouchers. The voucher means bill. Bill means when you are going to when you are going to buy one book, the shopkeeper prepares one bill. He will prepare one bill. That is called voucher. Voucher, it will describes full detail of that transaction, and that is why the whichever account is maybe the personal account, the real account, and nominal account, whichever account may be, we should disclose fully. Disclosure. Okay. And next, materiality principle. Materiality principle refers to the relevant information of an item or an event. According to American Accounting Association, it is important. It is an item should be regarded as a material if there is a reason to believe that knowledge of the would influence the decision of an informed investor. So here, guys, so whichever it may be, the material, those what is a material or the statement. So which what I say that if you purchase one machine, if you purchase one so and so car, and that should be material. As for the material, there is a cost. So that material we should record in this organization, in these books. And next, conservation principle. The sixth one is prudency and conservatism principle. Prudency. So here, guys, prudency and conservation principle. We should image. We should image our future losses, not profit. So don't anticipate a profit, but all possible losses. So or I'm going to continue my organization. I'm go next year. So that time I will measure which loss will I maybe raise, which loss maybe raise. That time I imagine myself. So and so loss will be increasing in this time. So that is why I am saying that we should follow some rules and regulations. So in future, if we get in loss, how we recover from there? But don't measure profit. Why? Because we know very well about losses. But profit, if some case, it won't be happen. But loss will be happen. But profit, it may become or not. But loss must be come. Why? Because profit we calculate in end of the year, but loss we cannot calculate end of the year. So here guys, one thing you should observe: before starting the business, we should we should image or loss, how much loss we will get from this organization, as well as end of the financial year. So when we prepared a financial account, final account, then you will realize the what is the profit I got in this year. That is told in conversion system principle. And seventh one, cost concept or historical cost principle. According to the cost concept, an asset is recorded in the books of account at the price paid to acquire it. Cost is the basis for all subsequent accounting of the asset. So, okay, one pen we had purchased in last month. That pen price is 5 rupees. Now that pen price is 2 rupees. So in these two things, which amount you will write? So when you purchase the one pen, the pen price is 2 rupees. Now the pen price is decreasing. So now pen price is 2 rupees. So 3 rupees is decreasing. So there is a cost different. So that different we have to access. So when we are purchasing those goods, we should write those those price only. So don't take the present price. So that is the hard explaining or this cost concept. Okay, historical cost concept. And next, I want to give an example for the cost concept. One motorcycle you have had purchased it last year. The motorcycle value is 30,000, but now the motorcycle value is 60,000. So in that book you should write 40,000 only. Why? Because when you had purchased those book, the motorcycle value is 40,000 only. So price is 40,000 only. That is why you should write 40,000. Don't take 60,000. 60,000 is present value, so you don't take. If you purchase present now, you can record those 60,000. But you had purchased in previous year, na. So that is why you have write those previous price only. And next thing, the matching concept or matching principle. The with you can see the here you can see an important objective of business is determining profit periodically. It is necessary to match revenue of the period with the expenses of that period to determine correct profit or loss for the accounting period. So here guys, you can see in balance it that the equal figure will becomes after the completion of accounting, final accounting. Why? Because it is coming like that? Because there is a matching. There is matching between assets and liabilities. That is why it is coming outside a fixed price. So that is the fixed amount of price. And next, dual accept or duality concept. So if one transaction is debiting, this next another transaction should be created. According to the dual accept aspect, concept. Every transaction entered into by an enterprise has two aspects, a debit and credit of equal amount. So here guys, so and so thing is coming, alternative we are so and so thing is sacrifice. Why? Because without sacrificing you cannot get something, without getting you cannot sacrifice something. That is why here you can see the rent paid. Rent paid means you get the comfortable sleep and live and sit in room, as well as you are sacrificing your money from yourself. So that is a dual aspect. Dual aspect means rent is paying, that is why we are debiting, as well as we are giving cash, that is why cash is going outside from the organization, so we are giving, givers, we are the givers, so that is why created. So that is the dual aspect concept. And next, revenue recognition concept. Revenue recognition concept mean, you can see here, the according to revenue recognition concept, revenue is considered to have the realization when transaction has been entered into the application of received the amount is established. It is it is to be noted that recognizing revenue and a receipt of an amount are two separate aspects. Let us take the example to understand it. An enterprise sells goods in February 2018 and received the amount in April 2018, and revenue of this sales should be recognized in February. So when we had sold those goods, we should write those goods we had sold in previous year, but don't take in present year. So if you had sold 100 bikes in last 2020, but now here this year you have sold only 3 motors, so that time you should write so and so goods I sold in 2020 and so and so goods had sold in 2021. So that is the revenue recognition. When is revenue is coming, that time only you write, you must and should write in this book, but otherwise you don't take that book, don't take that value in book. That is the most important. So this is the 10 principles. Once I revise, the first one is accounting entity or business entity concept principle, money measurement principle, and third one is accounting period principle, and fourth one full disclosure principle, and fifth one materiality principle, and sixth one producers or conservation principle, and sixth one cost concept or historical concept principle, and eighth one matching concept or matching principle, and ninth one dual aspect or duality principle, and tenth one revenue recognition concept. So that is the entire our syllabus. And so if you have any queries, if you have any doubts, you can consult me in personally, and as well as once you cannot understand this video, you see once again, so then will you understand those principles, and once you read those the principle in manual book. So thank you, thanks a lot, or honorable principal sir garu, and vice principal ma'am garu, and staff members, and the my as well as non-teaching staff. Thanks to all to giving this wonderful opportunity to me. Thanks a lot. Thank you.